brutal dance on this January 29th. Take a look on this trade. That frozen at reversal zone, reminding you this is not the place to buy. This morning market goes from completely dead to spectacular volatility. But if you know where to take the profits off the table, and if you know where reversal zone is, you are exiting, not entering your trade. And that's exact same thing any and every instrument does. You witnessed this dance on S&P this morning for the last hour. You witnessed the importance of proper stop order placement. You witnessed cannot short into support, cannot buy into resistance, identified weeks in advance, no matter what chart you trade. This is long-term trend chart, focus of mastery course. And this is your trade. Nothing else is possible. But just like this junky 1-minute chart, collapsing from reversal zone is what S&P long-term trend chart had done on January 18th, 19th, and 26th. And the dance you witnessed this morning between key support and key resistance is no surprise. As I continued warning you, bias remains firmly bullish because this support remains respected. And that's the dance this morning on S&P. And if I convert this chart to 5, exact same formula remains. This is your range. Nothing else is possible. We discussed this morning that if you choose to buy in this area, your success rate less than 10%. We discussed this morning if you choose to short near this area, your success is less than 10%. This is a dance. Nothing else is possible. And to the tick, price action and Fibonacci show you reversal zone where you exit the trade, not entering the trade. And this dance on S&P can remain for hours, hopefully not days, because market waiting for FOMC tomorrow. From completely dead to extreme volatility, very powerful lesson, again and again and again. Only when rules are met, and you know how to place stop orders, you will succeed. As every single tick matters. So, clear on this? Not the place to buy, the place to exit? No surprise. So, and this is a reason I love what I do. All you have to do, make an effort. And if you make an effort, the skies are the limit. Let's take. And what a spectacular reminder. If you know where to exit your trade and you play by the rules, the skies are the limit. S&P done exact same thing as Apple, as Netflix, as any chart you trade had done. We agree? This is Apple today. Charts look twins with S&P this morning. How many points did Apple collapse? 90 plus. All present in front of you for years. How many points did Amazon collapse? Let's take a look what Amazon looks like today. No surprise. not the place to buy, the place to exit. From 2000 to 1300. And that's what you see in the trading room every day. The power of the method in live markets, no matter what you trade. Because price action remains exactly the same. So, where is S&P right now if there is a reason where buyers coming from? Well, let's take a look on our long-term trend chart and see. Remember we discussed this is reversal zone where we're expecting interesting bullish response. But first things are first. This is the support. Right now, sellers fully in charge. However, this is support where we can see worthless bullish action. Let's convert this chart to 1 and see what that looks like. Everyone seeing this? Worthless bullish action. And if I convert this chart to 15, exact same formula remains. Fibonacci levels present in front of you for weeks kept you out of trouble. Most important rule you learn in the course kept you out of trouble. Every day, every time, exact same price action. Exact same rules. So, not the place to buy. Clear on that? If I remove the name from the chart, you would not know what you're looking at. And this is exact same dance on VIX, where VIX sold off from for the last 2 years. Just like S&P, 1 minute chart in front of you this morning. And this is exact same dance on Tesla for the last 2 years. All identical Fibonacci levels. Drastically different strategies. And this is also gold in the last 2 years. Gold sold off from Fibonacci reversal zone 2016, 2017, 2018. Not the place to buy, the place to exit. How many points did gold collapse from in 2018? Gold collapsed exponential number of points. Almost 200 per share. Anyone surprised where buyers stepped in from? Should not be. Fibonacci reversal zone where you monitor for reversal. Which is again what we're paying attention to on S&P now. We're not far off from reversal zone. Just like to the upside, now to the downside. Rules are met. Take a trade. This is where buyers stepped in from since early January. Just like on gold, all on S&P. January 16, January 15, January 17, January 22nd, 23rd, 24th, yesterday morning. And as I warned you, price has taken a pause. Agree? Rules are met, take a trade. Rules are not met, do not touch this market. No matter what you trade. And again, if I convert this chart to 1, anyone surprised that buyers stepping in? Should not be. Market oversold. This is expected. This is again where a knowledgeable trader monitors for trade and does not touch a bait. It's only a bait, there is no reason to touch a bait. So here's another trade, this counter trend trade that's been in a play for the last hour. 2637 holding the key. In order for this trade and the market to become bullish, this level must be out. If this level remains in play, that's a problem. Market remains in pain. We've been here for an hour. Again. Shorts are not an option. Remember, market oversold. You never short outside of decision point too close to reversal zone. Again, if I convert this chart to 60-minute, you will see this is where buyers stepped in from since early September. Time and time again, not the place to short. This is a place to short from. This is a place to monitor for long. So, what S&P will do next at this level will determine market for the rest of the day. This level is not out. Buyers are weak. It remains counter-trend move. 7 months at this resistance before price skyrocketed to 2300 after the election. An hour on this chart. If buyers remain weak, this level will never be out. Again, cannot short oversold market. This is a place, as you saw, shorts exiting the trades. This is a place knowledgeable trader monitoring for reversal. To the upside, this is a problem that remains. This holding the key. And this is exact same level where Apple in pain for the last 3 months. And this is S&P. Drastically different strategy, exact same level. Agree? So, Apple almost 3 months, S&P for an hour of this. Do you want to trade Apple or do you want to day trade S&P? Choice is yours. And here is a very powerful reminder on oil. This was oil in 2016. How long did oil start at this level? For many, many months. S&P in front of you charts are twins. Exact same Fibonacci level, very different strategy. This is what oil had done 2 years later. Skyrocketed and broken through. As you can see, oil showing you very, very clearly 77 reversal zone. Expect selling pressure. And this is what oil started doing 10 weeks later. Start selling off as expected. If you know an indicator that can do this, I would love to see. And this is what oil had done next. No surprise. What do I say? 64 is out, 55 is next. Weekly resistance becomes weekly support. Had oil done that? Of course. This is oil next. Selling off into oblivion. As expected. This was oil in the last 2 weeks at key Fibonacci resistance. Do you remember what played out in the trading room last week at the time of oil news? It was flawless reminder. Fibonacci resistance, not the place to enter into. How long we've been sitting here? Week number 3. Taking S&P 2016-2017 to break through this level, a year. How long we've been here? Last 4 months. In the last 3 weeks again, drastically different strategy, exact same Fibonacci level as you see right now on S&P. Clear on that? All the same. Fibonacci levels, drastically different strategies. You want to start with this? The sky's the limit. This is what Brad and this is what Tom started with. They could not get enough. They wanted to learn more. So did Pablo. From complete beginner trader to trader who've been trying 12 plus years. Drastically different countries, drastically different backgrounds. Very much the same effort. And that's what you see in the trading room every day. The power of the method in live markets, what you decide to trade, absolutely up to you. Agree? Rules are met to take a trade. I constantly meet with the graduates of the course all over the world, from New York to Florida to Singapore to London to Switzerland to Germany to California. Every single year, every few months. Next, I will be in New York, meeting with students and graduates. So if you are in the course, I look forward to hearing from you. I look forward to meeting you. Key moment on S&P. After this, we are out. Nothing here to do if this level is not out. So what does a knowledgeable trader do right now? Knowledgeable trader making decision and says, I had enough of this. I've been here for almost an hour. Knowledgeable trader moving his stop outside the break-even, taking some profits off the table because he knows how crucial this moment is. This is next level traders. If price can do this, bullish trend is major. Just like you saw on Apple. Just like you saw on S&P. Just like you saw on Apple and oil. It's all the same. Different strategies. Completely. Take the profits of the table and run if you had enough of this, as buyers remain weak. Counter trend move, price is showing you time and time again. Bullish weakness across the board. If you decide to remain in this trade, your stop absolutely must be outside of break-even and 70% of your position off. So here we go, finally an hour of this and little day trading chart doing exact same thing as Apple had done, as oil had done, because it's all the same. As gold had done, it's all the same. Agree? Gold almost at exact same level. just like S&P in front of you right now. No surprise. Agree? Very, very happy to see that buyers finally picked up the steam, taking over an hour. Extremely important target, just like on oil. How long was oil sitting at this level? For a very long time. Agree? 4-5 months, as expected. And that's where S&P is now. And if you're reading what a disaster about Brexit, anyone surprised? Why is pound rallying? My goodness. All the horrific news, and how much is pound up from this level? Look at that. Why in the world is that happening? Because Fibonacci reversal zone, not the place to short, the place to expect reversal. As pound down in 2017. No surprise. And that's S&P in front of you. Every day, every time, to the tick. The power of pure price for entry and Fibonacci for exits, no matter what you trade. So here we are, traders. An hour later, price finally at key Fibonacci level, as I warned you when you saw price in pain for the last 40 minutes. How crucial this area is. Finally, after an hour of trying, buyers fully in charge. This is where you trail very, very carefully with stop outside of 26.37. Because as you saw on multiple examples, this is very important place where you trail very, very carefully. Because chances of powerful bearish pullback exponentially high. Just to remind you, this is a trade right now, and this is a trade at the start of the video. Ultimate reminder, only if you respect Fibonacci levels you will succeed. Only if you know how to place and execute your trade, you will join the ranks of successful traders. That remains the key. So if you would like to join Brad, Tom, Pablo, Ken, anyone and everyone that you saw commenting in the room, in any of the courses, I look forward to working with you. Foundations course, you master the basics. Mastery group course, you master so much more. In Mastery Private Mentoring, you have access to all group classes, and of course I work with you one-on-one. All the details on every single page. So please review the details and do not hesitate to contact me at this contact us page or 925-257-4298 or info@fibinstitute.com. Thank you, traders.